Well, I'd say over the past 10 years, the better part of the last 10 years, there's been a significant increase, obviously, in the amount of capital and liquidity that these largest institutions hold. With respect to capital, it's about a 40% increase in their Tier 1 capital. So when you combine that with rigorous stress testing, certainly more robust supervision, the detailed planning that these institutions now, recovery and resolution planning that they are doing, there are a whole host of things that they've done. And of course, there's the backstop authority, which I know Phil Swagel was commenting on just a few minutes ago. So, that's a handful of things, but I would say the most crucial thing is this Tier 1 capital that these institutions hold now. The largest institutions, that 40% increase, that's the loss-absorbing capital that I think these institutions need to hold to weather a future storm.
Did the smaller institutions, was it at their expense that, the big banks are fine and doing well now, but a lot of those regulations shouldn't have maybe been applied to the smaller institutions, right? I mean, have we pulled it back now to where they can safely say they're competing and it's a level playing field now? Or?
Well, there's been revisions to Dodd-Frank.
Like pulling teeth, though.
And it's been a process that the Congress took on, and they did roll back a series of regulations with respect to these, smaller and some of the medium-sized institutions, and I think that was appropriate, and it was a bipartisan act on their part.
And you can see where, there's all this residual bitterness that we talk about, and there should be, because the big banks were ramping up, they were growing too slowly. They ramp it up and get in all those products. No clawbacks. There's guys still, out on golf courses that made $200 million that basically would have sunk their firms, and they didn't sink.
Well, I think if you look at the reforms that have been made, and you look at the leadership of these institutions, and you look at the risk management processes that they've put in place, which are, quite significant, and then you look at the contributions of these largest institutions to the economy, which are extremely significant. The $4 trillion in lending that in consumers and businesses, they play an important and essential part of the economy.
What do you make of the arguments by people like Neil Kashkari, who was in the middle of this as well and worked with you, who today believes the banks, at least the biggest ones, are now way too big and that they ultimately should be broken up?
You're right. I know Neil. I don't agree with him on this point, and I think there are a lot of others that don't agree with him on this point. And I would say that the norm in terms of the view in how the institutions are capitalized right now does not. It does not align with some of the things that he's been advocating.
One of the questions we talked about at Brookings yesterday with Paulson, Geithner, and Bernanke is whether
you mean at the Hutchins Center?
At the Hutchins Center at Brookings.
Okay.
Is whether these living wills will actually work in practice. Theoretically, it all makes a lot of sense. But if we actually get to a point of a crisis, do people say, you know what, we're not going to roll the dice and actually try this? The
living will process obviously is untested. But the process that we have gone through, that these institutions have gone through, these detailed roadmaps of their institutions, the largest institutions that are part of the forum membership have reduced the subsidiaries of those institutions by about 50%. So just going through the process of preparing for this has led to the simplification of their organizations. And that's information that they have developed for the regulators. So if you don't get to the living will process, obviously that's the goal. And the whole point of having this robust capital and liquidity in the system right now is intended to prevent us from even having to use those tools in the first place.